Gold is money, has been for thousands of years. I know I'm not the first one to tell you that. It's gold versus dollar. Like, where do I want my savings? How much do I trust the greenback? More and more people are starting to say, you know what? A little bit of allocation to a safe haven like gold is not a bad thing. Probably if you're watching this interview, you do expect the gold-dollar exchange rate to go higher, and you want your frickin' gold stocks to go even higher. I think you'll get your payday.
Hi everyone, Daniela Cambone here. Hope everyone is enjoying the summer series and your summer overall. I know it's the time that we're supposed to be kicking back and relaxing, but important that we don't become complacent. And if you do not have a financial strategy in place, I strongly urge you to contact us. Book a Calendly appointment. We will offer you and give you a free information session. All you have to do is click on the link below in the description of the videos and choose a time and day that suits you best. And one of us here at ITM Trading will reach out to you and help you build a surefire, foolproof wealth preservation strategy. I strongly urge you to do that. Now check out today's video. Hi, this is Daniela Cambone and welcome back to the Daniela Cambone Show. Still on the road here in Boca Raton, Florida. We are day 2 of covering the Rick Rule Natural Symposium Conference, really one of the go-to events of the sector. And I'm joined today by the Independent Speculator. You can find them on independentspeculator.com. Lobo Tiggre. Lobo, so good to be reunited with you after years of interviewing you.
Yes. As your long-term fans know, one of your first interviews with Kitco News,
You're taking us back.
How long ago.
We can. It's been over 15 years. I just started very young, Lobo.
So yeah,
That's right.
Wow, we really go back.
Man, we've come a long way. So congratulations on all your success, and obviously your fan following and everyone that really follows your work religiously. And I've been following you, obviously, for a long time. And one of the recent pendings I wanted to start with is your comments on how the U.S. Was able to get out of debt after the War of 1812. We've been speaking so much about the debt we have today. Yeah. Why can't it be the same?
Well, yeah. So first, there's a tweet pinned. Well, it's not a tweet anymore. It's a post on X pinned on my Twitter account, my X account. That has this animated chart.
Yes.
Right? And the idea is, like, you see the U.S. national debt from the beginning, and it starts high. We just had the Revolutionary War, borrowed a lot, printed a bunch of not worth of continentals, right? You know what I mean?
Yeah.
Okay, and so you see this pile of debt, and then they pay it off, or they're paying it off, which is this gets to the answer to your question. Like, why would that even happen? It's a sign of the times, you could say. I think it's a cultural thing. In those days, people understood that debt is bad. Debt, by the way, MMTers, is not money, nor is it the basis of money. Debt is a burden. It's a bad thing that if you can, you pay off with real money when you have it, right? So everybody understands that when you have debt, the person you owe the money to owns you until you pay it off. Anybody with a huge mortgage knows this, right? So they're paying it off, and then the War of 1812 hits, and it skyrockets, and that debt, that mountain of debt becomes like a little foothill, and it skyrockets, right? And then this was what was gobsmacking to me, is they actually, over the years and decades after that, paid that off, like completely. Take the national debt to zero. Can you imagine zero national debt?
No.
Like, inconceivable. They take, and then Civil War, you have, well, the Mexican-American War, as we call it in the United States. By the way, Mexicans call it the American Invasion. In the 1840s, warm up, Civil War, and then, so like that huge pile of debt from 1812 that looked giant before. Now that becomes this tiny foothill compared to the Civil War. And you go, well, of course, the Civil War, brother against brother, it's got to be huge. And as huge as that is, over the next decades, with Reconstruction and everything, devastation on American soil, they're still paying down the national debt. They got like halfway there after the Civil War. And then you get into, whatever crises, the Fed, first, by the way, and then World War I. And that previous mountain now becomes this tiny foothill that you barely see compared to how high the debt goes in World War I. And then it starts coming down. And then you get the Great Depression in World War II. And that previous mountain becomes this tiny fly speck compared to World War II. And then guess what? We all know how this goes. World War II ends. They start working on a bit, but not much, really. We're now sort of in the modern world. The rest of the world has already dumped the gold standard, and it's just the dollar that's good as gold, right?
Right.
And then 1971, Tricky Rick Dixon, Tricky Dick Nixon, Richard Nixon, de-goldizes the dollar, takes us off the gold standard. And then all of these previous things just disappear as the
isn't that
goes
interesting?
vertical. So sorry, I'll let
Yeah.
you go.
No,
but to answer the question is, and this
finish.
is, sorry, it's a bit of a sad answer.
Yeah.
That different time, different place, people understood money then. They knew what real money is. You could hold it in your hand, and it had weight, it defined weight. Right. And debt was bad. The people you own the money to, the Medicis, the bankers, whoever, they owned you. And they got rid of it as fast as they could. Nobody believes that anymore. Modern economics teaches us the opposite, and fiat currencies tell us that, it's the good faith and credit of the government. That's what money is. Or the MNTers now want to define debt as money. So, why would you pay it off in a world like that? But reality matters, sorry, and it will. The piper will get his due.
Yeah, I mean, it's crazy how the mindset completely shifted. So what happens if we were to return to a gold standard? I mean, is that even a possibility for you?
Not without a lot of pain, but yes, I actually think it not only can, but will happen. Now, here's one of those Rick Rule things. We're here at Rick's show.
Right.
Got to quote Rick.
Right.
Never confuse the inevitable with the imminent. Lose a lot of money doing that. And I'm sure you've talked to Brent Johnson, the Dollar Milkshake guy.
Yes, we just had him on, yeah. Mm-hmm.
Okay, so I almost hate to say it, as a hard money advocate, as a person who's personally used metals, gold and silver particular, in an emergency as that ultimate source of liquidity, as a person who's actually had that experience in his life of hard money saving him from multiple deflations and financial catastrophe.
In your personal?
In my personal life, that's actually happened. Mexico has chopped a few zeros off its currency a few times. The United States hasn't gotten there yet, but it will. So I think Brent is right in that, yes, the dollar is garbage. Yes, the dollar's days are numbered. No fantasy can last forever, but it's going to take a long time.
Yes.
And it's, and so, people want to hate him for being anti this, but he's actually not. He's not anti-gold, and he's not actually pro the fantasy that's the dollar. He's just saying, don't kid yourself. This will take a long time for the empire to unwind and its currency. The piper must be paid sooner or later, but that doesn't mean it's sooner. It certainly doesn't mean when your favorite gold stock should go up according to you. So you got to separate these things. And honestly, I really think that you take these big macro megatrend things, they're interesting, they help us understand the world, but they're not investable. You just put them aside as not theoretical knowledge, but historical context that influences, colors your thinking, helps you understand what's going on. But then you look at what's happening now. Forget the inevitable. Let's focus on the imminent. And then even more, my thing is to focus on what's happening now. What are the trends that are happening now? And which ones are investable? Which ones are durable?
So let's talk about that. What are you seeing?
Okay, so completely switching yellow metals, I think the uranium trend is extremely strong. I've said repeated times, and I really believe this, I think it would take a Chernobyl scale event to derail the uranium thesis. Because just like the fundamental bare bones basic is that 19-20% of the US's electricity is nuclear, it's 80% in France. It's a large chunk of the world's energy comes from nuclear. Now, there is no substitute. Sorry, not thorium, not any other thorium, it's uranium for now. And it's necessary now. And the secondary supply is gone, mine supply is insufficient. And that alone, supply and demand tells you. But then there's the demand side is going nuts, right? The Chinese and the Indians, India, BRICS, whatever, they're building them as fast as they can. So there's a strong demand side story here. Even Europe, despite Germany, has done a U-turn on this, and particularly the very practically minded people in Eastern Europe. They want to build them as fast as they can. Ukraine just signed a contract, right? Even Ukraine in the middle of war is going nuclear. And then you've got the West dragging its feet, but, you know, reading the writing on the wall, where even the U.S., even the former opposition to nuclear energy in the U.S., the Democrats, and, you know, seeing uranium as part of the solution, as it may be a necessary evil, nuclear power, but climate change panic, you know, there's people who think we're all going to die in 12 years, or is it 11 or 10 now, I forget. But, you know, we're all going to die if we don't stop oil now. And even, you know, with the most aggressive adoption of windmills and solar power possible, you still can't do it without nuclear. I mean, that's just math. And people are starting to see that. And so the demand story is going nuts right now, where even the most, you know, obstinate opposition, or even Japan, where Fukushima happened, has done a U-turn and is restarting their nuclear. Even Korea did a U-turn and, you know, going back to nuclear. So, but then you come back to the supply side, and the supply just isn't there. And it's constrained, and okay, the world's two biggest producers are ramping up, but that's not enough, and they're having problems. So this isn't just imminent. It's not just inevitable. Like, this is what's happening now. As you and I speak, we're waiting to hear. It's July 2024 for future audiences, right? And Kazatomprom, the world's largest and lowest cost producer, yanked its guidance for this year, 2024, and they deferred guidance on next year, 2025, even though we're halfway through. They're supposed to tell us what they're going to produce next year, real soon now. Have they solved any of the problems that have caused them so much trouble? I don't think so. So I'm not saying, you know, tomorrow uranium's going to the moon. Right. Don't get me wrong.
Right. So
I'm just saying happening now is supply constraint on top of this.
And just let's take a step back for those in my audience who are maybe never even thought of uranium. I mean, it's a very opaque market. It's not like there's many news. It's not like gold that you could get a lot of news and information from this market.
And you don't go down to your local coin shop and pick up a
so
bar.
it's priced in pounds. So right now we're at around, what is it? 80 pounds. So where could you see uranium headed, just for context?
I brought this up as an example, by the way. We don't have to make the whole show a uranium show, but I brought this up as an example, and so because I want to put a period at the end of the sentence.
Okay.
As an example of, you know, a very powerful investable trend that you see happening now. This is happening now, and I gave an example one of a catalyst that's due more or less immediately, and there are others that are due this year. So this is what I mean by forget about inevitable. You know, set aside what's imminent. You know, look at what's happening now. This is happening now, and by the way, I think gold is happening now too, but that's an example. So where could the price go? My answer is actually two. One, because the supply is constrained, it can go much higher than it needs to go. I would actually say that the price we're at now is the price that's needed to incent new supply, new production. It's, you know, at $85 plus or minus, we're in a range where the lower or the better producers, lower cost producers in the better projects, they all work. And those projects are coming on. People are building new uranium mines now. That is also happening now. Of course, it takes years, but it's started, right? High prices have started to cure high prices, another Rick Rule quote. But that's going to take years while the demand is already there and ramping up. So I'm very bullish. And because the supply cannot respond quickly, that means the price can go higher than it should. So I don't have a target for you. I mean, I'm happy to get the direction right. We are in a consolidation phase now. I do think we'll see another breakout. I think it will go substantially higher. Triple digits is easy. That's not a crazy, wild, arm-waving prediction. And I think that would be very good for uranium stocks.
Well, let me segue there.
Okay.
If triple-digit uranium is not crazy, what about triple-digit silver?
That's actually, if you inflation adjust the previous spikes to $50 on silver, particularly the 1981, you're looking at triple-digit silver. Now remember, those are spikes. That's not, you know, the long-term average price. So that's not to say that silver should go to and stay at triple-digit prices. But could it spike that high? Sure.
You're bullish. So are you more bullish silver versus
Okay,
gold
let's go then.
equal. Let's just.
But let me finish answering the question about uranium, and I will remember this. So what I was saying is, I am bullish on the price. I do think that squeeze, if you will, the
Right.
uranium, not Wall Street bet
Right,
squeeze,
right,
but like the real world
right.
squeeze, can send uranium prices much higher than they should or need to go. Like they actually don't need to go higher. And this is the point I was trying to make: is with the right companies
This is
that
the
can
right
make
price,
money
right.
at 40, 50 bucks, or even 60, or even 70 uranium all in. If they can make money all in 70 and we're at 85, they've got margin. So the better companies make money and become investable.
Well, speaking about margin, then let's talk gold price. I mean, this should be the glory days for the miners here.
That's a good segue. Okay, so first I got to say, I never say gold price. I always say gold dollar exchange rate.
Okay.
Because in my mind, gold is money, has been for thousands of years. I know I'm not the first one to tell you that. And therefore, gold versus dollar is a Forex question, in my view.
Okay.
And that's not just being pedantic or theoretical. I think that's really important that people remember that gold is money and treat it that way. And I think the world is actually remembering that now. And I think that's part of the answer to your question. It's not the price of gold like the price of coffee or even copper. It's gold versus dollar.
Okay.
Like, where do I want my savings? How much do I trust the greenback? And in this world, more and more people, the weaponization of the dollar, I'm not the first one to tell you that. I'm sure the audience has heard that too. Like, these things are real and they matter. And it doesn't mean that, a la Brent Johnson, that everybody dumps the dollar, it's the end of the dollar tomorrow, or August 24 last year when the BRICS were going to adopt a gold-backed currency, right? Never mind all these crazy headlines. The trend that's happening now, and even Brent would agree with this, the trend is there towards de-dollarization. And the impact of the consequences of Ukraine's second war with Russia, the second invasion of Ukraine. And, and now, they're talking about just taking the interest on Russia's seized money, but it's still taking Russia's money. I'm sorry, you can legally massage that all you want. But the point is that they're taking Russia's stuff and dollars. So what does that do to anybody else that holds dollars? Obvious. And we see the central bank buying of gold. I think it's a perfectly natural and logical thing. And it's really interesting to me that we've had now 2 months in a row where China has reported not buying gold. And when the first report like this came out, gold tanked in a very visible way. Second one came out, gold just kind of wobbled. And why? Well, if China wasn't buying any gold all of June, which I don't think is true, but let's say it was, and gold still went up to, within kissing distance of 2,400 last Friday on the close, without China buying, that tells you it wasn't just China, which comes back to the first answer to the big what's going on now. The trend I see happening now, and I can't prove this, Daniela, this is a theory.
Okay.
But it's not just China.
Right.
And it's not just the central banks. And my reason for this, the evidence that I can point to, is that we saw a hockey stick in gold this year. The gold dollar exchange rate really, 2,300 is the new 2,000 in gold, which is like, but the central banks, the global south, they've been buying gold for years. That doesn't explain the change this year. Like what? Even the new war in the Middle East, that's last October. And so if you're going to be, buying gold as a safe haven because war in the Middle East is not a good thing, right? That's last October. It doesn't explain the hockey stick this year.
It doesn't.
So therefore, this is my explanation. Now that doesn't, again, this isn't a proof, but my explanation is that we finally reached that Minsky moment, the aha moment, whatever you want to call it, where more and more people are starting to say, you know what? A little bit of allocation to a safe haven like gold is not a bad thing. Boy, this is a long-winded answer, Daniela, but I am getting to your question. This is another Rick Rule thing, right?
Yeah.
Right. His thing, his shtick for many years has been the global average allocation to gold, the portfolios over the decades. Like 4-decade mean is 2%. And he'll tell you, I'm sure he's told you this, I think it's currently around 0.5%. Yes. So we don't have to go crazy, everybody buying gold. If big money around the world simply reverts to mean, that's a 4x, from 0.5 to 2, is a 4x increase in investment demand for gold. I think that might be what we're seeing this year. If it's not just the Chinese, right? If it's not just the central banks, if it's not just war scare, what is it? There's not one big headline catalyst you can point to. Therefore, it's a shift. Someone somewhere with big money has shifted.
I think you're onto something. Also, I would add on to that, because gold is no longer correlated to traditional things we correlated it with, U.S. dollar, yields, whatever the interest rates.
Even real interest rates.
Like it's going,
you're right.
Like the whole, I think Ross Norman had a great article on this. Like the nighttime sky for gold is unlike anything we've ever seen. The constellations
have changed.
Well,
I didn't put it so poetically, and I need to update it. But I
doesn't
wrote an
that sound
article
beautiful?
on this too. No, but like the highest correlate since 1971, since Richard Nixon, completely severed gold from the gold standard. There are multiple variables.
Yeah.
And clearly, something like war scare does move gold. And you can see gold moving directly, inversely to the DXY, the dollar index. So therefore the dollar, supposedly. You can see it on a daily basis. So that's a factor. Other things, there are multiple factors. There's no one variable. But the one strongest correlate for 50 years has been real rates. It's been some months now. Actually, it was late last year or sometime last year. But I ran the correlations, and actually nominal rates had a higher correlation than real rates as of last year. Over 50 years, like something has changed. So that poetic constellation may be.
But you also are making me think of something else, because we often use the term gold as a safe haven. But to your point, folks are seeing it as, I want to replace my dollars with gold.
I think that's part of it, but part of it is also, the portfolio allocation question is something that I think, I can't give you a statistic. Right. I don't have a number here, but I'm seeing this more and more on mainstream financial media, not gold bugs, not Peter Schiff, right?
Yes.
But some guy from B of A or some big hedge fund saying, well, we're putting a little bit more in gold now. Or like when people say, Tina's broken, what do we do? Mm-hmm. And somebody says, gold.
Like a goon lock.
Right. And before, they used to get laughed at.
Yes.
Like, what are you going to do? Gold?
Right.
Like that has gone, that has changed from, what are you going to do? Buy gold?
Right.
To, well, how about some gold? That's, if that fits what I'm saying of this change. So putting the pieces together, and back to your question, which I do remember, believe it or not, right? So I think this is happening now. This is a trend that is measurably happening now. And I'm not a technical guy, but for gold to bounce off 2,300 repeatedly and then head back up again, that's showing some really interesting strength, despite a strong dollar and these other things. So, but the gold stocks have underperformed. This was
this was the original question. I just got lost in your
my mesmerizing storytelling.
No,
right? Okay, no. So this was the question: what the heck's wrong with the gold stocks? There's a free article on my website. Are gold stocks a broken asset? And the truth is that they have underperformed since 2020. They had this huge spike in gold, and they've been underperforming. So the short version would be this breakout this year. They're performing. That leverage is back. The mojo is back, if you will. So no, they're not broken. Now, why did it happen? I don't know how much time you want to spend on it. I think there are reasons. But the short answer is no. Like we can see, this year has demonstrated, gold shocked people paid attention to it, and then somebody said, well, how do I get leverage on this? Mm-hmm. Gold's working, what gives me leverage to this? And you could see, gold moves 1%, the good quality gold stocks move 3, 4, 5%. That's why we bother buying these stocks at all. And I understand that's been very disappointing since 2020 for that seemed to be broken. But I don't think it's just a fluke that we saw this year. I think the reasons why, expectations, all kinds of things, why it wasn't working so well in recent years, I think this breakout this year has brought that back. And if it continues, like if gold goes downhill from here, if I'm completely wrong, all of us here at this conference are completely wrong, gold's going back to $700 like Harry Dent promised us 20 years ago, right?
Good old Harry Dent.
Good old Harry Dent, right? So that would be bad, but that's not what we expect. If you're at this conference, or probably if you're watching this interview, you do expect the gold-dollar exchange rate to go higher, and you want your frickin' gold stocks to go even higher. And I guess if you want to make this the Lobo waves his arms scene of the interview, I do think you'll get your payday. I do think those stocks, the better ones, not your crappy moose pasture stocks, But
Yeah,
the
the
ones
better
that have
ones.
assets that matter, that actually have any gold, I think you'll get your payday.
Let's just wrap with this. And you're going to say, well, that's a pretty loaded question to wrap with. But, you know, for the folks who are maybe new to your work that are watching, why was gold an answer for you? What attracted you to it?
Well, that takes us back to history and also the silver. It's funny how you jumped on the
Silver.
silver sideways
Yeah.
because I am Darth Silver
Yes.
after all. That's my
Yes.
other
Yes,
my other mantle, right?
I wish I had a cool
Well,
AKA like that, you know. Anywho.
right. Um, so my mother's from Mexico. I didn't like grow up as a poor kid on the streets of
Okay.
Mexico.
That would have made a
but
good, better
it would've-
story though.
But I
yeah.
spent a fair amount of time on the streets of Mexico
Yeah.
playing hooky from school
Yeah.
and hustling. And I got the bug early and I bought silver coins. I just thought that was really cool. I understood that they had somehow, even before Ayn Rand or Milton Friedman or anybody else, Adam Smith got hold of my tender little brain. There was something about, or maybe it was being in Mexico and understanding that devaluation happens, right? I understood that, you know, a silver peso was not like the paper peso. It had silver in it, right? So I started collecting those. And when they chopped 4 zeros off the peso, I still had the silver, right? And so in 1980, when the Hunt brothers cornered the silver market, I'm a paper boy, not a shoeshine boy, but you know, still, I was like the proverbial shoeshine boy giving people advice on their mining stock investments. You know, maybe a contrary indicator back then. I was the paper boy, and I was buying silver. Like I was saving. At that point, I'm a early teen. I had 13 or something like that. The reason why I've written about this, another free article. You know, it was in defense of hard money, and it's a free article on the website. But the reason why was because I had all this experience in Mexico. But in Mexico, not that many people were like me, you know, saving in hard, real money. They thought dollars were hard money.
Right.
And so if anybody in Mexico had money, you put your money, your savings in dollars because you knew it wouldn't be inflated away and then the zeros chopped off like happened in Mexico. And that literally happened to me. I had some babysitting money or something, I don't know what it was, in dollars. And I had some other money in pesos. And there was a bank holiday and we woke up the next day and 4 zeros were gone. So the pesos were just nothing. They weren't even worth toilet paper because they were too scratchy.
Overnight.
Like overnight. So I really learned that the dollars were where it was at, right? I thought. And then I came back to live in the United States again. And this is late 70s where inflation is high. This is Volcker and all this stuff's going on. And it was like it was just this huge betrayal because I thought that the dollar was my safe haven. And then I come back to the United States, see high inflation here, and like, holy crap, that's like what's going on in Mexico. The dollar's not any better than the peso. So, silver.
Wow.
And so I understood gold too, but I couldn't afford gold. We didn't have crypto. We didn't have blockchain to give me fractional ownership of tiny amounts of gold. I had to buy the poor man's gold, silver. So I was a silver stacker back in 1980, and I didn't quite top to the market. I didn't buy at 50, but I did buy in the mid-20s. And then, of course, it rolled over. And sorry, long story short, like I'm underwater on most of my silver for decades. But it was silver, it was savings, so I just put it away. And then I had a financial meltdown in 1999. And I was halfway to Costa Rica with a Winnebago full of kids and no money. And the job I thought I had disappeared, just like this huge financial meltdown. And I had a briefcase full of silver, pesos, in Mexico. And these weren't solid silver pesos. These were these cheesy things that as a kid I could afford, these 50s and 60s silver pesos that had like tin, I don't know what else they had in there, but they had a bit of silver in them, and they looked silvery. So I'm desperate, I'm broke, I go to a pawn shop, and I take a stack of silver pesos. And so remember, this is a 1956 peso, say. By that time, 3 or 4 zeros have been chopped off the peso 3 or 4 times. Like if you had a paper peso, you had 1/1,000,000th of a peso or 1/1000,000th of a peso. So I go to the coin shop or the pawn shop with my physical silver-ish pesos, and guess how much they gave me for them? 1 peso. I mean, it wasn't a lot, but there was enough silver in there that they gave me a peso, which at the time and they had chopped all these zeros off, was actual money. So I sold silver and I literally went from the pawn shop to the grocery store.
And we're able to buy some
And I bought food for my kids while I put together a business plan of what the heck am I going to do now.
Wow.
right? So this is what I meant earlier when I said, like, I actually have this experience in my life of real money saving my family. And, you know, that's not the sort of lesson one forgets easily. So even today, like, I have no savings account in a bank. I have a checking account. I have current accounts. And my savings is in bullion.
Wow, what a story. I've known you for all these years, and I never knew that personal story. So thank you for sharing that. I mean, that really, I mean, I don't have anything to add. That just makes the point of why, you know, obviously I'm biased, but I absolutely believe that one should be owning gold or silver. So Lobo Tiggre, continue doing good work. I'm so happy for all your success. Well deserved. And we'll see you soon in the Independent Speculator.
Yes, thank you very much.
Yeah, thank you. And thank you for watching. We'll have more great coverage and, wow, amazing stories like Lobo's coming your way. So be sure to stay tuned to the Daniela Cambone Show, and you can sign up at danielacambone.com. Thanks for watching.